Welcome to the Daily Update Podcast, where I'll go over the action in the market for Tuesday, July 8th, and we'll see how things look for Wednesday, July 9th. The market delivered a lackluster performance on Tuesday, with the major indexes trading in a tight range, signaling consolidation. The S&P 500 closed down a modest 0.07%, just below the daily pivot at 62.31 on below average volume. Despite this, the S&P 500 remains positive across all time frames, holding above the critical 20-period moving average, which continues to define the short-term bullish trend. The indicators paint a mixed picture. The ADX trend indicator confirms a positive trend, but momentum appears to be stalling. Overbought conditions are easing slightly, with indicators such as the Stochastics and Williams R showing elevated readings, while the TTM Squeeze has joined the list of intermediate-term overbought signals. Momentum indicators are split. Some are improving, while others, like the Chaikin oscillator, are turning negative, suggesting caution for short-term traders. Looking at key economics and policy developments, on the policy front, trade and tariff news failed to move the markets. President Trump extended the July 9th trade deadline with no further extensions past August 1st for certain countries. Commerce Secretary Lutnick noted significant offers from the EU, but the market shrugged off these developments, treating them as background noise. An executive order eliminating green energy subsidies and a potential 20% tariff on pharmaceuticals also had little impact, as investors appear desensitized to such announcements. Rising interest rates are a growing concern. The 10-year yield is climbing to 4.42%, approaching the critical 4.5% threshold. A rebound in the U.S. dollar could also pressure equities, though its long-term trend remains negative. The NFIB Small Business Optimism Index dipped slightly to 98.6 from 98.8, and consumer credit growth slowed to $5.1 billion from $16.9 billion, indicating cautious economic sentiment. Looking at sector and asset performance, sector performance showed small and mid caps outperforming their large cap counterparts, with the S&P 600 small caps up 0.78% and mid caps up 0.4%. Mega cap growth and tech stocks, however, lagged, though semiconductors recovered most of Monday's losses, with the SMH ETF gaining 1.33%. The FANG index was mixed, with Apple and Meta posting gains while Amazon and Google declined. Looking at broader asset classes, bonds remain negative across all time frames, while commodities are positive on all time frames. Energy and materials saw gains, healthcare staged a modest recovery, but staples and communication stocks were weaker. Growth-to-value ratios remain constructive, with the discretionary to staples ratio nearing a golden cross, signaling potential strength in consumer discretionary sectors. The technical outlook and market sentiment. From a technical perspective, the market is still trending positively, supported by a recent long-term golden cross. However, momentum is slowing, with the Nasdaq 100 testing a long-term trend line that may act as overhead resistance. The VIX remains stable, but fear gauges did tick up slightly, reflecting minor hedging activity. The weekly overbought oversold composite stands at 85, a high but not extreme reading, leaving room for either a breakout or a possible reversal. Sentiment is positive but still bordering on extreme, with internal buying evident in the bullish percent indexes for the S&P and Nasdaq 100. Seasonality supports optimism, as early July has historically been a strong period for equities, particularly for the S&P 500 and Nasdaq, dating back to 1950. Looking ahead to Wednesday, July 9th, investors should monitor several key events. A minor event is the weekly MBA Mortgage Applications Index. Releases will include wholesale inventories, and the biggest report will be the Fed meeting minutes, which could provide a catalyst, though the markets may remain data-dependent. Initial jobless claims and the 10-year note auction are also significant on Thursday, as the latter serves as a benchmark for interest rate sentiment. Geopolitical developments, including ongoing tensions in Russia and Ukraine and Israel and Iran, remain in the background but are not currently driving market action. In conclusion, the market remains in a positive trend but showed little conviction on Tuesday. reflecting a wait-and-see approach among investors. Rising interest rates and a rebounding dollar warrant caution, but positive seasonality and internal buying provide a constructive backdrop. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.